All right, let's dive in. We're tackling something a little different today.
Oh,
Yeah, something you might even call a secret weapon.
okay. I'm intrigued.
We're talking about the ascending base pattern.
An oldie but a goodie.
Exactly. And it's especially handy in, you know, those choppy markets that can make investors a little skittish.
Yeah, those sideways markets where you're just not sure what's going to happen next.
Exactly. So our deep dive today, it's all about demystifying this pattern.
Helping people understand how to spot it and what it might mean for their investments.
Exactly. And our research, it really dives deep into the mechanics of it all.
Yeah.
So hopefully, after this deep dive, listeners will feel a little more empowered.
More confident in those uncertain markets for sure.
Right. So one of the big takeaways from the research is that this ascending base pattern, it actually points to strength.
Yeah, even when the market's not giving you a clear direction.
When it's kind of like wobbly.
Yeah, exactly. Think of it this way. The pattern typically emerges over, say, 9 to 15 weeks. And what you see is a series of higher highs and higher lows.
So it's like,
Usually, it's almost like a staircase.
okay, a staircase. I like that analogy.
Yeah, and it's tilted upwards, right? So it's not just flat, it's actually moving higher.
Okay, so each step on this staircase, what's happening there?
Well, each step tells a story
Okay.
about buying and selling pressure,
Yeah.
So you have those pullbacks, right? Those are like the little dips in the staircase. And they usually range, I'd say, about 10 to 20%.
From the previous high.
Yeah, exactly. And that's key. They're relatively shallow.
So they're not like these huge...
It's not a free fall, right?
Yeah.
It suggests that buyers are eager to come back in on those dips.
So it's not a panic sell-off. It's more like a healthy correction.
Exactly. And then you have the rally, which pushes the stock to a new high, right?
Okay.
And so this back and forth creates that upward tilt.
That's what makes it an ascending base.
Right. That's what sets it apart from other base patterns that tend to, move more sideways.
Got it. So that upward tilt, it's got to be more than just a coincidence, right?
Absolutely. That's often a sign of institutional investors stepping in, accumulating shares.
Okay, so the big players.
Yeah, think mutual funds, hedge funds, those kinds of folks.
They're seeing something that we might be missing.
Yeah, they're seeing potential, something promising in the company's fundamentals.
Interesting. So they're willing to kind of ride those dips.
They buy on those dips, which creates that steady upward pressure.
Got it. So the fact that this pattern is emerging in a choppy market, it almost seems to add to its significance. It's like it's being tested.
I love that. You're exactly right. It's like a test of strength.
The market's all over the place, and this stock is just,
It keeps climbing those stairs.
Yeah, it's weathering the storm.
Right. It's demonstrating resilience, and that's attractive to those big institutions.
This is fascinating, but let's get practical. If I'm seeing this pattern, what do I actually do?
Okay, so the first thing is patience. You want to wait for what we call the breakout.
Oh, yeah, I've heard that term.
Yeah, so that's when the price moves decisively above the highest point of the entire pattern.
Okay, so it's breaking free.
Exactly. Like it's finally shaking off those chains, right?
All right, but how do I know it's the real deal? What if it's a fake out?
Volume. Volume is your friend here. Look for a surge in trading volume on that breakout.
Okay, so that confirms there's real interest.
Exactly. It's like the market giving you a thumbs up.
Okay, now what if I don't want to go all in at once? Can I, ease into a position?
Absolutely. Some traders, they like to buy in stages.
Okay.
You can use those pullbacks within the base, as entry points.
Smart. So you're kind of strategically using those stair steps.
You got it. But remember, each dip should ideally find support at a higher level than the previous one.
To confirm that upward trend.
Right. Reaffirming that upward bias, that's what you want to see.
Got it. Now, risk management. We can't forget about that. How do we protect ourselves?
Absolutely. So that's where stop loss orders come into play.
Okay, those are important.
Yeah. You want to place your stop loss order just below that last higher low.
So it's like a safety net.
Exactly.
Yeah.
If the stock breaks down unexpectedly, you're limiting your losses.
You're not going to lose your shirt.
Exactly. Keeps you disciplined, avoids those emotional decisions.
Yeah. I know we had a hypothetical example in our research. I think it'd be helpful to walk through that.
Okay. Yeah.
Imagine a stock trading at, let's say, $100 in this choppy market.
Okay.
How would it move through this ascending base pattern week by week? Paint us a picture.
Okay. So let's say in the first 4 weeks, the stock rallies to $120.
Shows some initial strength.
Right. But then it pulls back to, let's say, $108.
Okay, so that's our 10% pullback.
Right. That's what we're looking for, those shallow dips. This is where our eager buyers step in.
They see an opportunity.
Exactly. So that first pullback establishes our initial higher lows.
Okay, so where do we go from there?
Okay, so weeks 5 through 8, let's say the stock climbs to $130, a new high.
All right, but then another pullback comes.
Of course. This time, down to $117. Again, about a 10% drop.
Creating another higher low.
Right, and that reinforces the pattern, right? Showing us that buyers are consistently supporting the stock at higher levels.
Okay, so now we've got 2 steps on our staircase.
Exactly. And each step has those shallow pullbacks, just like we want.
So what does that third pullback look like?
All right, from week 9 to 12, the stock rallies, let's say, to $135.
Okay.
Now this time, the pullback only goes down to $125.
That's not even 10%.
Exactly. It's a shallower dip, maybe about 7.5%. This suggests that selling pressure is weakening.
Okay.
A breakout might be close.
I can feel the anticipation. What happens next?
And then, boom, week 13, the stock just bursts through that 135 level.
That's our breakout.
That's it. And you want to see it happen on high volume too, right? That confirms the move.
So that's when we jump in, right?
Ideally, yeah. But remember what we said earlier. Patience is key.
Don't get ahead of ourselves.
Right. If you rush in before the pattern's fully formed, you could get burned.
Okay, so wait for the breakout, confirm with volume.
Exactly.
Yeah.
That's how you tilt the odds in your favor.
I'm really starting to see the power of this ascending base.
It's a great tool, especially in a market that's, not giving you a clear direction.
Yeah, it's like finding those little pockets of strength.
Exactly. Identifying those stocks that are bucking the trend, showing that resilience.
And it's not just about blindly following the pattern, right?
Right. You got to understand what's happening underneath.
It's about those subtle clues that tell us, hey, maybe the big institutions are accumulating shares.
Exactly. Those shallow pullbacks, that upward tilt, the breakout on volume, they all point to underlying strength.
Okay, I'm sold. I'm adding this to my watch list. But I got to ask, are there any other tools that can help confirm this pattern?
I'm glad you asked that. Because, yeah, no indicator is perfect on its own. So it's always a good idea to look for, multiple confirmations,
Yeah. Makes sense.
One tool you could consider is the RSI.
The what?
The Relative Strength Index, or RSI.
Okay, refresh my memory. What does that tell us?
It's basically a momentum oscillator.
Okay.
It measures the speed and change of price movements.
Okay, so how would I use that with the ascending base?
So let's say you see an ascending base forming, right?
Yeah.
If the RSI is below a certain level, say 70, it suggests the stock isn't overbought.
So it still has room to run.
Exactly. That adds another layer of confidence to your setup.
It's like a check mark saying, yep, this stock is healthy.
Yeah.
Anything else I should be looking at?
Yeah. Another popular one is the MACD.
MACD.
Yeah, the moving average convergence divergence.
Okay, I've heard of that, but to be honest, I'm not totally sure how to read it.
Basically, you're looking for what we call a bullish crossover.
Okay.
That's where the MACD line crosses above the signal line.
And that means?
It can signal a strengthening trend, potentially confirming that breakout from the ascending base.
So it's like another piece of the puzzle.
Exactly. You're building a case for your trade.
Yeah.
Right.
Yeah, the more evidence, the better.
Exactly. You're increasing your odds of success.
This is amazing. It's like we're detectives uncovering these hidden opportunities.
I love that. And trust me, there's so much more to explore in the world of technical analysis.
So this is just the beginning.
This is just the tip of the iceberg.
I'm excited to keep learning. Okay, I want to recap everything we've talked about.
Sure.
So the ascending base pattern, it's all about spotting strength in a weak market.
Right. Look for those higher highs, higher lows, that upward tilt.
Shallow pullbacks, decisive breakout on volume.
You got it. It's a pattern that rewards patience and discipline.
Waiting for that breakout, that's key.
Absolutely. And don't forget about risk management.
Always got to have that stop-loss order in place.
Exactly. Protects your capital, keeps you in the game.
You've given our listeners a lot to think about.
Hopefully they can apply some of this to their own trading.
Absolutely. But before we wrap up, I want to leave everyone with a thought-provoking question.
Okay, sure.
We talked about RSI and MACD, right? As confirmation tools.
Great tools to have in your arsenal.
But what other indicators could we use with the ascending base? Or even fundamental factors, to really validate a trade?
That's a great question. It really gets to the heart of what investing is all about.
Which is?
Continuous learning. Always searching for new insights.
I love that. It's not about having all the answers. It's about being curious, asking the right questions. Yeah, it's like we've given them this new way to look at the market.
Absolutely. It's about seeing potential where others might see, just a bunch of random movements.
And the cool thing is, this ascending base, it's not just for stocks, right?
Nope. You can apply it to, well, pretty much any market.
Crypto.
Crypto, yeah.
Commodities.
Commodities, Forex, you name it.
So it's a versatile tool.
It really is. It helps you make sense of price action no matter what you're trading.
It's like having a secret decoder ring.
I like that. And the more you use it, the more you'll start to see it everywhere.
It'll become second nature.
Exactly. You'll start to anticipate those breakouts,
That's the goal, right? To be one step ahead.
Right, but it's not just about memorizing the pattern. It's about understanding the psychology behind it.
Thinking like those big institutions.
Exactly. You start to understand why certain patterns form, what they tell you about supply and demand.
It's a whole new way of looking at the market.
It really is.
Well, this has been an awesome deep dive. Super insightful.
Glad you enjoyed it.
I feel like I'm ready to tackle any market now, no matter how choppy.
That's the spirit.
So just to recap one last time, the ascending base, it's all about strength in the face of weakness.
Higher highs, higher lows, that upward tilt, breakout on volume.
Patience, discipline, risk management.
Couldn't have said it better myself.
Well, thanks for joining us on this deep dive. We hope you learned a thing or two.
Absolutely. Happy trading, everyone.
And until next time, keep exploring, keep learning, keep diving deep.